Hey folks, Dan Frio here, the rate update. Today is February 2nd, 2021. What I want to talk about right now is mortgage rates. And then what's my expectations of the mortgage market and the housing market for 2021? Don't go away, that's what we're going to talk about next. So I scan through YouTube on a daily basis, plus the web, all over the web. And a lot of I noticed the most viewed videos are in regards to the housing crash of 2021. And that must be a pretty good clickbait. And because I see people getting hundreds of thousands of views, and then you watch their videos and, there's data there, but here's my take on it. I've done this for 30 plus years. And I've been through ups and downs and the way highs and the way lows. So here's my 2 cents on what's going on and why we can't really look back to 2008 and 2009 as a kind of a model of what we're to expect here coming up. But I do want to address the forbearance piece of things and the rental forbearance or relief on your rents for people. So let's dive down this avenue. So I get it, where a lot of people are in forbearance. Okay, I get it. And that's basically what they're doing is the mortgage companies, they learn their lessons in the past. Guys, we're in the mortgage business. We don't want your house. Okay, that first of all, we don't want your house. We're not realtors. We don't want your house. We want to work with people in regards to their mortgages. Okay, so the forbearance thing is helping a lot of people with their mortgages. Okay, however, there's a lot of people receiving stimulus money that aren't out of work. So there's probably, I forget the details, and I'll look this up. There's say 900,000 people getting stimulus checks, or millions of people getting stimulus checks, and there's say 300,000 or 400,000 people out of work. And those numbers are off. I get it. So I don't, the feedback is, but there's a lot more people getting stimulus checks or intended to get stimulus checks than that are out of work. Okay, so that's number one. The forbearance thing, basically anybody's, you really don't have to prove anything to get a forbearance. I've been called on my mortgage. I'm like, what's needed for the forbearance? I didn't do it, but they're like, just basically tell us and you can postpone 6 mortgage payments. So a lot of people are like, heck, I'll postpone 6 mortgage payments. If my mortgage payment's $2,000-3,000 a month, that's $15,000-$20,000 I don't have to pay. I'll worry about it down the road. So that's what a lot of people are doing. So there's that piece of it. So I get the reluctancy there, or the fear there, of people saying, a lot of people are out of work and the foreclosures are going to escalate and so forth. But what we're missing is back in 2008 and such, there were, I'll say this, predatory lending. There was a lot of subprime mortgages done, and they would go up to 100% of the house's value. There's programs that went to 125% of your home's value. Absurd. Okay, so that's one. Bad underwriting and 100% loan to values. So you had no equity in homes. All right, that's behind it. Since then, the underwriting has really tightened up. And yes, there are programs with 3% down or 4 or 5% down, but you have to have really good credit and qualify. There is no liar loans, which means there were loans in the past where you didn't even have to verify your income. Those are well in the past. So you have to document your credit, your income, the money as your down payment, all these things. So that's one. Underwriting is much tighter and better. Okay. The next piece of the equation is most people now have equity in their home. Even if you put down 3% and you lived in the house, you had another 3 or 4% appreciation in that home, plus you paid down the mortgage. So now you're basically, say, 95%, what we call loan to value. Loan amount divided by the value of your home. We're not at 100 or 125%. Okay, so that's number 2. The banks are working with you, not like they did in the past. In the past, they would do mortgage modifications, and they would just, honestly, they would hose you. They would come back and say, okay, well, you owe $200,000 and your rate's at 3%, your payments, I'm just making these numbers up, but you'll get the point where I'm going with this, is your payment is $2,000. Well, if we cut your payment by $200, would that help? And people are like, yeah, it can't hurt. Okay, well, we'll rewrite your mortgage. You owe us 10 grand in arrears, so we'll forgive that for right now. We'll throw that all the way on the back end. So we're going to adjust your mortgage basically to the balance you owe currently. We're going to rewrite that note. What they didn't tell you is they'd rewrite that note on a 40-year term. Now, they told you and sent you out documents, but at that point, you're like, I just want to stay in my house. So you'd sign anything. So they would rewrite your note on a 40-year term at a higher rate to drive down your payment a couple $100. Okay, so now you got a 40-year term at a higher rate, but you save $200 a month in payments. Then after 40 years, you owe the deficiency back on where you were behind at the time. So if you missed a year's worth of payments and your payments are $2,000, that's $24,000. So after 40 years, you'd still owe $24,000. It was a mess. So a lot of the banks or mortgage companies now realize, why don't we just let you kind of postpone 6 or 12 months payments? We can add that to the back end, or, this is where you really got to be careful. We don't know what they're going to do. So be careful on that. When your forbearance is coming up, let me know, and I'm going to give you all my information at the end of the video to show you or how to get a hold of me. So the forbearance is going to help people because, again, guys, we're not in the real estate business. We make money on lending money. We don't want your homes. So as a mortgage companies, we're doing everything we can to work with people. So that's one. Another thing, and again, there's equity in your home. So if it really gets bad, you can normally sell your house. Even if you can walk away with nothing, at least you could sell your home. Okay? So all of that is, I'm not expecting a crash. Also on the sidelines, you got thousands and thousands and thousands of people that want to buy. So you can put your house on the market today, and I'm hearing this from people all over the country. They're getting bids within hours. Hours. Bids, plural. So you can put your house on the market. You can have a buyer by the end of the day, or within a week, you can have basically it under contract to sell that home. So there's appreciation there. There's people willing and wanting to buy homes. There's people that are buying homes. Interest rates are basically still at the lowest ever in history. With all of that in the mix, I'm not anticipating a crash. Okay, that's my take on it. And that's my reasoning behind it. Yes, I know there's a lot of people in forbearance. I know there's a lot of people not paying their rent, and obviously the house they rent probably has a mortgage on it from somebody. But that person is also under a forbearance agreement that might be helping them, or they might not even, they might be still working, doing great. The stimulus money might be helping them make mortgage payments and so forth. So it's not a repeat of 2008, 9, 10, because I lived it. Okay, so that's my take on the crash, and please watch out on the clickbaits. So that's that. So let's get on to what's going on with real estate today and mortgage rates. So we go to, I went to this particular website. I'm just trying to find data to help you guys just learn some things and to prove to you what I'm telling you is fact. I don't like to just come out of thin air and say, oh, this and that and this and that. So I'm trying to show you, the facts behind everything. So signs of optimism in the economy, mortgage rates dip. You got all kind of data here, but you have new home construction soars. There is more demand than there is supply, and that's another reason why there should not be a crash in the market. Okay, so that's basically, I want to show you there that home builders are still building like crazy because they can't keep enough inventory in stock. So what happened today with rates? Well, the MBS market was up too. People were asking me, where do you get this data? This is a paid service I have. I have several of them. I can link them down below, but I would suggest just watch me on a daily basis and I'll give you the data you need. You don't have to spend hundreds and thousands of dollars on all of this to accumulate the data. But this number here, what this is what happened to the price of a mortgage-backed security. This is what's going on with the price of this particular bond. This is a bond that trades that is the biggest component to your mortgage rate, okay? As this price goes up, yields or mortgage rates come down, okay? If this number were to go down, what happens is mortgage rates go up, okay? So there's an inverse or a reverse effect on this. This number goes up, rates come down. This number goes down, rates go up. here is the trend of what's happened for the last quarter. Okay, so I'm going to go through this with you just so you can get a gauge of what's going on in the market. There's lines that go across here horizontally. Okay, and they're here, here, here. I'm trying to make them a little bit slanted so you can see where I'm pointing out. Here, here, here. These are what we call Fibonacci levels. When you're charting, there's Fibonacci levels. What this means is it's resistance levels. So it's resistance levels up. So normally you'll go up and hit that and stop. When you're going down, you'll hit the Fibonacci level usually and stop. If you blow past this level, this is the next resistance level, and then the next, and then the next. So normally you'll have a hiccup here. You'll bounce off of these and kind of come back and forth. But if you blow through it, then it gets a little scary. It creates another level. Okay, so what happened is in the last few months, we kept hitting this chart here. We kept hitting this top Fibonacci level. You could see it. I mean, look at it, guys. It's dead. It hits that line dead on and stops. So it's like a bumper when you're playing bowling. You're going to throw the ball down. It's going to hit it and bounce back and hit it and bounce back. So that's what should happen. Well, we had a reversal back in the beginning of January, and within a week, rates skyrocketed. Okay, remember, if you're going down in the price, your rate is going up. So there was a swift move to the upside. I basically said to everybody, hold on. There was an overreaction in the market. We should be trading it between the 50 and 25-day moving average, and I'll explain that in a minute. So we should be trading right in this level right here, okay? That was what I predicted back here. We've gradually moved to it and hit it a few times, and we've backed off of that. And we're backing off. There's some uncertainties in the stock market and some other things that are really causing a blip in the markets. You probably heard about GameStop and AMC and BlackBerry and Bitcoins and hedge funds and all this other stuff, Robinhood. If you heard that or you haven't heard that, I highly suggest you watch my videos in the morning. I call it Scrub, my Scrub video. It's stocks, crypto, real estate, and bonds. And I explain to you all these things in regards to, we go over what's going on in the stock market with the cryptocurrencies, such as Bitcoin. We go over real estate. Should you buy, rent, or sell? We go over rates. We go over the bond market and so forth. It's all correlated together. But we should be trading at this level here. You're going to see lines here. There's a purple line, a black line, and a brown line. That represents, let me get rid of the 200-day moving average. That represents the 100-day moving average in purple, 50-day moving average in black, 25-day moving average in brown. That's why I'm saying that we should be consolidating right on the 50 and 25-day moving average. And we basically did. If you look at it, we hit it, kind of close here, close there, exceeded it there, but stayed there, hit it there, and then we backed off it from there. I still say we should be trading right in this range. We should have about a 0.1 reduction in rates is where we should be. Are we going to get there? I don't know, but that's where we should be trading. Okay, so that's what's going on with rates. I don't really see anything that should really hiccup rates up or down. We should be basically steady. If you watch this as we go through this video, we are live, so you're going to see this move. It's been moving from 0 to 0.2. What we also follow here is the 10-year Treasury. I started following that just to educate everybody on, this is a bond as well, the 10-year Treasury. I'm expecting this rate to go to 1%. Okay. Last week, before I left on vacation for a couple of days, we went from 1.1 all the way down to 1.03, and I thought we were going to hit it, but it's come back since then. So I think our bond yields are going to drop a little bit more down to a 1 level. That'll also help mortgage rates. Okay, so that's basically what's going on there. Let's see what happened throughout today, the whole day. You can see we came out of the gate, and MBSs went up, which is good. And then we came back down, but we've always been positive all day long. And then we went up here, and we should be closing kind of at the high end of the day. And you're going to probably see this update here shortly. So all day long, we've been in a good rally mode on the upside. And again, guys, we want this number in the green, because if we pay more for the bond, that makes the yields or the mortgage rate come down. The economic calendar for the week We had construction spending and basically spending today coming in. Construction spending was higher than anticipated, but it's basically the housing market is going to boom. I'll ink that now. I'm actually hiring and setting up my office for a doubling of what we did last year. Okay. So the rest of the week is basically employment numbers, between employment numbers and our earnings. There shouldn't be anything here that disrupts the market. The only thing I see is employment worse than expected, and that would help the bond market and help mortgage rates come back down further. That's the only thing that I anticipate through the rest of the week. I also post this each day to kind of show you what the rates are doing on the 30-year term. I promise everybody I'll start posting 15-year terms, and I'll start that tomorrow. I just got in town late last night, and I'm playing catch-up, so please bear with me. These are 30-year conforming, jumbo, FHA, and VA. This is the national average. So you might get a quote from us or another lender that's a little bit higher than this or a little bit lower than this. And I'm gonna explain to you at the end of the video what you should do once you get your loan estimate on how you can take that and try to get a better deal, okay? Meaning maybe a lower rate or lower fees. I'll go over that here right at the end of the video. The 1-day delta and the 7-day delta. Delta means change. So 1-day change is the 30-year conforming rates went down 1 basis point. Well, what is 1 basis point? Well, basically, if you move that over here, we were at 2.84 yesterday. We dropped 1 basis point, and it's the second numeric number over. So now we're at 2.83. So not really much of a change at all. Okay, so nothing really changed. In most lenders, nobody even really changed their rates. 7-day delta, you can see they're basically flat as well. But from February of 2020 to now, you can see rates are almost 1 full percent lower than where they were. 100 basis points represents 1 full percent. So 80 basis points, is 0.8, 0.84, 100, which is 1%, and 102, which is also 1%. So that's where we're at today with those rates. The next thing is, this is a newsletter I'll be pushing out there here shortly, but mortgage rates slightly higher. I don't know where this data came from because, as you can see, we're going to go back to the chart. Mortgage rates are basically flat. So there's really no change there, but I post this at the end of each day just to kind of give you a lot of information, just to inform you, to give you, I like presenting you more information than you need, and you can cherry pick the data that you want. Here's where I was saying the clickbait that I see. You can see a lot of people, housing forecast, housing crash, housing alert, and they're getting thousands and thousands and thousands of views, foreclosure. I mean, it's just a scare tactic, and they're getting thousands and thousands and thousands of views. But when you watch it, I get it, guys, I get it. I would even love, if you're on this page or down through here, please reach out to me. I'd love to kind of debate with you, or we can talk about it in video form on what your take is and my take. And I'm more than willing to compromise, but just so we can get all the facts out on the table and let you guys decide. But you go through here and you can see a lot of this data. Jeb, he's an awesome guy out in California. He's a realtor. If you need a realtor out in California, I'd highly suggest you check out Jeb Smith. Check out his channel. Subscribe to that. He's got a lot of great data. Also down through here, Jasip, right here. Minority Mindset. This guy is amazing. He talks everything from insurance to 401ks to mortgages, all over the map. I subscribe to him and Jeb. Oh, they're side by side. These are two great guys that I would highly suggest you follow. They got facts. And a lot of people that you watch on here don't have the facts. It's basically clickbait. So, and if you're in need of a realtor out in the California area, we got several, and Jeb is one of those. He's a fantastic guy. So that is it right now. So what I was going to say at the end of each video, what I try to do is tell you, how do you get a hold of me? You're like, Dan, I like your content. I like what you're doing. You seem like you know what you're doing. I hope I do. I've done this for 30 some years. I'm not here for clickbait. I'm not here to deceive you. I'm just here to answer any questions and provide you the facts behind everything. what I ask people to do is go out there and get a couple quotes on your mortgage. And then after you get one, get at least one. Send me your loan estimate or your fee worksheet or your proposal that they gave you. Let's look at it. If you had major ailment, you wouldn't go to one doctor and they said, oh, you need your arm cut off. You'd probably get go to a couple doctors. You're probably working on a $250,000 or $500,000, $1 million loan or home. Get into the right rate, program, fees, and everything. So what I'll do is I'll analyze what you have and say, here's what we can do. Sometimes I can't beat what you have. Most of the time I can. I'll get you a lower rate and lower fees. If you got your due diligence or you got some program that was just crazy, I'll be like, God bless you, take it. I'm just here to provide facts and to help you guys out. So how's the best way to reach me? Well, it's pretty simple. You're going to go to therateupdate.com. Okay. This is what's going to come up. This is my website, and we're adding right now. It'll be we'll have a Spanish version up here within a week. You'll be able to click over here and translate the entire website. But the best way to get me is call 844-775-LOAN. That's 844-775-5626, or email me. Email me that loan estimate. Or if you haven't done anything, email me your mortgage statement. Let's go and analyze it to see, does it make sense maybe to refinance? And I'll do a refinance analysis for you, send it to you, and leave it in your lap. If it's something you're like, hey, this makes sense, let me know. Be more than happy to work with you. If you're like, man, it doesn't make any sense for me, then I won't reach out to you. Well, at least you tried. At least you reached into it. So here's the main part of the website. If you're looking to get pre-approved to buy a home, click here. It's going to ask you questions. Based on the answers to your questions, it'll guide me and you to the right program. Refinance, this is your tab here. If you're just like, you know what, I need help, and I need help now, and I'm going to use you, click the Apply Now button and get started immediately. If you want to talk to somebody, me or somebody on my team, click the Get a Free Quote. It better be within about 15-20 minutes somebody gets a hold of you. If it's not me, it's one of my loan advisors. And so that's all you need to do is click there. We have a free home valuation system. A lot of people use Zillow and Trulia and all those other stuff. It's confusing, and they don't have a lot of very correct or updated information. This is the #1 valuation system in the industry right now. It's a paid service. I pick up that cost. So we can get in there. I think it's about 5,000 subscribers. We have about 3 or 4 now, so there's room for about 1,000 more people. So jump in there before that ends. And then I don't sell your data. I don't basically share it with anybody else. We work with it here to inform you guys when might be a good time to refinance or buy or whatever you're looking to do. So that is basically it for today. So again, I have another video that I do each morning. It's called the Market Update, and I go over what I call Scrub, SCRB, stocks, crypto, real estate, and bonds. Check that out as well. Hope you like it. And please don't forget to leave comments down below. Click the bell so every time I do a video, you get an alert. And other than that, give me a thumbs up. God bless. See you tomorrow. Bye-bye.